I would like to introduce our moderator today, Christian. Christian Salamini is a 5-time sales leader and has over 20 years of experience leading high-performance go-to-market teams. Having executive leadership roles at startups such as Descartes Labs and PayNearMe, to leading divisions for multinational corporations such as Repay, Telefonica, and Rogers Communications, Christian's main focus has been on new customer acquisition and revenue growth. Functioning as a Chief Revenue Officer, a CRO, SVP of Sales, or GM, Christian has led sales, marketing, and customer success teams that have sold into some of the largest enterprise accounts in the world. Christian is also a board advisor to a number of technology firms, and over the past 8 years has been providing sales and strategy consulting. Based in the Denver metro area, Christian works with both startups and tech firms in growth mode to enable their B2B offers to grow by leveraging sales, marketing, customer success, and strategic growth strategies. His clients are premier solution providers in the SaaS, VC private equity, fintech, AI, ML, wireless, gaming, and IoT industries. So give it up for our panel here. Thank you, and enjoy.
Thanks, everybody. Very excited to be here today. Just want to go over agenda real quick. We're going to do some brief intros. We've got about 25 minutes of questions that I pre-prepared with the team here. And then we're going to open up for Q&A. So I'm really excited about the Q&A piece of what we're going to get into. Before I introduce the panel, though, I want to get a little feel for folks in the room here. Are there any businesses that are looking to acquire fractional help in the crowd today? Show of hands. Okay. Oh, there's one. Okay. What about fractional sales or fractional chief revenue officer folks in the crowd today? Okay, so then I'm guessing just about everybody else is not a classically trained salesperson, but you're a fractional CTO or a fractional CFO. And I'm so glad you're here because the people that I talk to regularly have the most questions about compensation and negotiation. They're worried about pricing it the right way, contracting the right way. Am I leaving money on the table? So this will give you all a lot of great ideas as to how to structure your deals. And I'm really excited about everybody from the panel, and specifically because of their depth and background. So I first want to introduce Henning Schwinnem from Vendux. He is a co-founder and managing partner. They are a matchmaking service that takes fractional sales executives, fractional CROs, and plugs them into businesses. He has negotiated over 100 of these contracts, I think, just in the last year. So he could talk a lot about what they do. So I'm going to pass over to him in a second for additional introduction. I also have Colin Herdman, and Colin's really interesting because he is a buyer of fractional services. So all these different sorts of revenue models that we're taking forward, he actually evaluates them and can talk about, hey, if I was pitched this, would I go for it? And he's got other good ideas that I think you all can take away. And then Brian McDonald, who's with On Purpose Growth and a partner there, does not only fractional sales work for businesses, but he's a fractional sales coach. So he's got some great ideas as well. But I want to pass it over to the team, talk a little bit about your background, and then we'll go into some questions.
Okay, well, I'll kick us off. Thank you, Christian. Henning Schwinnem. I always say my fractional superpower is sales. I don't apply it, though, as a fractional executive. That was my original intent 4 years ago. I learned quickly that I lacked the right connections to find assignments easily. We heard an example yesterday of someone who took a year to find a first client. I didn't want that to happen to me. And when I looked for an agency or a matchmaker who could represent me and who could help me find those assignments, I couldn't find one. There wasn't one that had a focus on the sales leadership role. And so at that point, I pivoted and decided I was just going to build that matchmaker. And as Christian says, today we are negotiating a few more than just 100 contracts a year. and we place executives. We have a roster of about 680 pre-vetted executives today that we place into sales leadership roles with companies.
Good morning, everyone. My name is Colin Herdman. I'm one of the co-founders of Monkey Island Ventures. Back in 2007, I founded that company with two buddies of mine, and we've all known each other since we were about 5 years old. Monkey Island is the name of a park that we used to play at when we were kids. It's located in the St. Anthony Park neighborhood in St. Paul, not too far from the fairgrounds. We are huge fractional fans. I've known John Arms for a decade, and he's really the one that got me introduced to it. But the companies that we have a couple of service companies. One is a software development company, and the other is a digital marketing company, and we employ about 40 people between those two companies. And we've brought in a couple of fractionals, fractional CHRO and a fractional CFO, which has been really transformative for one of our businesses. It's been just fantastic. So, but my history is really being an entrepreneur my entire life, and building great businesses and just making it up along the way is what I specialize in. So.
Everybody, I'm Brian McDonald. I'm a partner at On Purpose Growth. I've been in sales my whole 24 plus year career, helping businesses as a CRO, fractional, as well as consultants, fractional executives, EOS implementers, actually learn how to do sales because they loathe it. So excited to be here.
Excellent. Well, thanks, everybody. So before we get into the strategies, the first thing I want to ask you is, when you are either considering a fractional or you're working on an engagement, when does pricing come into the discussion at all? So, Henning, you want to kick that one off?
Absolutely. So I would apply to selling fractional services the same rules that I would apply for selling any other service or any other product. And to me, there are two points to bring it in. The first one is really early in the conversation, because you want to make sure that the client has the buying power to actually buy your service. Otherwise, you're wasting your time. And for me, that means talking about ranges of investment that they have to make. That doesn't necessarily mean a firm number. It doesn't mean terms, but it means investment. Are you ready to invest $10,000 a month into this assignment to grow your business? And I want to hear a resounding yes before we continue the conversation. And then I want to hold off talking about price until the very, very end of that conversation, because I want to clarify first all the specifics, all the needs the client has, the growth ambitions they have, the qualifications the executive has to bring to the table, the seniority that they require, the complexity of the assignment. All of that needs to be out in the open first before we can then hone in on a specific number. So very early and very, very late in the negotiation.
Thank you. So, Brian, on your end, similar, different? How do you scope?
I also talk about time. Like, hey, do you have the investment of time? Because the time is going to equal the price, right? Price is not just money. It's, hey, do you actually have the bandwidth? Do you want to do this, right? This is an investment. So I talk about that first, and then again, I do the range to see if we should continue the conversation.
Okay, so then, Colin, someone's pitching you on fractional, or maybe you sought one out. You're buying. When do you start it? Do you wait for them? Are you launching? Hey, how do you bill for this service? What do you do?
Well, we know with the services that we sell that we do want to understand if someone can afford what it is that we sell, and of course, as we're buying, we want to know if we're going to be, is it the $10,000 a month range, which might be a pretty quick. Don't think we can do that. But to us, it really is establishing an understanding of the value of what's being provided. But cost, yes, of course, that matters. So I think no one wants to waste their time in a conversation if someone truly can't afford what it is that you're selling. And as a small business owner, costs matter. So I would imagine that, within that first conversation, you need to get into those ranges. But to Henning's point, you do want to establish rapport and an understanding. And and what the value is that's going to be offered in an engagement.
Excellent. So that's setting it up, but there's a whole bunch of different strategies that people use. Retainers, some people do hourly, other things. Colin, I know you have one that you've been talking about. Shared success, I believe, is a model that you're employing. Can you talk a little bit about what that means, what sort of reception you've seen in the market to it, and pros and cons of using that approach?
Yeah. So Cloudburst, our software development company, uses a model called a shared success agreement. And this is really a new category that we're standing up against debt, equity, safes, crowdfunding. And I'll tell you a story of how the idea first really came about. So in 2012-ish, we had just come off of launching a product that took us about a month to build. We signed up about 30,000 users in 2 days. It went viral on Twitter. It was a Twitter product that would localize Twitter users around a zip code, a city, and a state, and it really took off. We didn't make any money on the product, but what that parlayed into was creating another product called SMB Tweet, and what that product would do would grow a Twitter audience for local retail or like local coffee shops, and the idea around the algorithm came from us, but we are non-technical founders, and so we ended up hiring a developer. And the developer said to us, look, I know you guys are in startup mode. He goes, my normal hourly rate is $100 an hour. He goes, I'll charge you $50 an hour to build your MVP. But once it's built, 20% of your revenue goes back to me until I'm fully paid out at $150 an hour. And we were like, okay, that works for us. So what ended up happening was he got paid an hourly rate of $50 an hour, which he was comfortable with in building the MVP. Once our product was up and running and we were generating revenue, he got an additional income stream coming in where we're paying him out at $150 an hour for all the hours that he put in to build the MVP. And for us, we got our MVP built and we did not have to give up any equity. And so what we've done is at Cloudburst over the last 5 years is we have offered some of our clients shared success agreements where we're discounting our services really for a share of future revenue. And so for us, it really wanting to democratize entrepreneurship, we've created this new category, and we've created a website called sharedsuccessagreement.org, where anyone can go and learn about shared success agreements. They can use a calculator and be able to understand what it is that they would be offering. And there's different fields on there where you can look at the project size, what percentage of that would be shared success, what percentage would be your normal rate, what the multiple on the shared success component might be, and over what period of time do you expect to get paid back. But for us, it's what we're really trying to do is help as many founders and owners connect with talent, which could be fractionals, it could be really marketers, accountants, lawyers, anyone providing a service falls in the talent category. And then finally, there's also a funder persona. So you can also give money through a shared success agreement, and you do not have to be an accredited investor. So for us, what we're really trying to do, we don't make any money on this. It's really just standing this model up as a new way for fractionals and other service providers to really share in the risk, but also the upside of businesses. And I think this could be a really unique opportunity for fractionals to start landing business sooner and creating these partnerships that can really turn into a win-win for both sides.
Yeah, so definitely check that out. It's really cool. So free for everybody. So all right, so you've done a ton of these. So what translates well? What's kind of the norm for you guys? And have you had anything that's creative outside the norm that you've been working on? Probably yes, but I'll leave it to you.
Everything is creative.
Yeah.
I love, Colin, the shared success agreement, especially because it applies to non-sales function. I get a lot of inquiries from founders who want somebody to sell, who want somebody to help them set up sales, but all they want to do is pay commission only. And my answer to the question is always, it depends. And then I ask back, how did you pay the developers who build your product? How do you sell? How do you pay your marketing agency who does your marketing for you? And the answer is often not a shared success agreement, but rather some sort of fixed fee. So what have we seen? Everything, and it depends. I think there's room for every type of compensation model. A 100% success fee, like a commission-only model, applies, for example, when you have a great number of sales reps and you're adding a few to that mix, because now you have a track record of existing reps who get paid on a commission basis, and you can show the success that they're having, and you can say, on average, our reps make this much. There is a pipeline and a conversion record that you can point to. But on the other hand, if you're a startup founder and you're the one selling your product, you're the only one selling your product, and now you want somebody to come in and build an outbound sales process for you, there is a lot of foundational work involved. It's not just coming in and saying, hey, give me your product and your positioning, and I'll go out and sell it for you. That's not how sales works. And that's not how you scale a sales team. There's a lot more involved. You have to build foundations like a tech infrastructure, a messaging, a sequencing, a lead sourcing, and that foundational work needs to be paid for, and that has to be some form of retainer payment. And so the vast majority of assignments that we do are either a retainer, or it is a retainer plus a shared success model, whether that's a commission or a bonus. It's either just a retainer or a mix of retainer plus success fee.
Yeah, and heading on the retainer, is it specifically tied to X amount of hours per week, per month, or generally a day, a week, or what do you see? What expectations do you set with the client?
Good question, and let me digress just a little bit to loop the discussions in that I've heard this morning and yesterday about hourly rates and how to charge for hours. And again, there's room for every model. If you are providing very specific services against a statement of work, let's say you're a copywriter or you're a graphic designer, then it's, in my opinion, a perfect model to be paid on an hourly basis, because you can tell the client, in order for me to write this copy, it's going to take me 5 hours, and if you want more, you have to pay more. When we fill strategic leadership positions, it is much harder to tie it back to hours. If you are a chief revenue officer in a company, and you have an agreement that says approximately 20% of your time, or 8 hours a week, you don't drop your pen when those 8 hours are up. You look at it over a longer period of time, and you say, over a month, over 3 months, it has to average out to that number. And yes, I'm tracking my hours, so I know I'm not overspending. But it might be that, especially in an assignment, that you end up being front-loaded and you're spending more time at the beginning. And when it goes into more of a running of an execution mode, then you cut back your hours naturally, because there isn't that much building to do anymore. And so that's how, so to answer your question, now that I've digressed, there is always a thought and a contractual indication that says so many % of somebody's time, or the equivalent of so many hours a week, but it is not hourly billing, because that doesn't apply to any strategic leadership function, whether that's a CRO, a CMO, a CFO, a COO. I think for none of these functions could you really go on a truly hourly rate.
And when I roll on with a client, I tell them at the beginning, I'm going to way over index on you. You're going to get a lot more time because I got to get up to speed on your business. But I also set expectations when I'm working with multiples. This is going to ebb and flow. You may have some weeks where I'm doing 5 hours or I'm doing 15. So you got to understand, you might have a board meeting that I'm helping support. So I'm going to give you more time this week, but my next client might have one next week. So as long as you're setting expectations up front, they're typically pretty agreeable. I've got one that's a little wild and out there, but I just wanted to throw it out there before I get over to Brian. So one of the ones that I worked on way early on before I even started doing this full time, it was in an industry that I understood really well, had a great product, and I knew they were going to be successful. So I went to work for them, kind of fractional selling for free, but commission-based. But I asked the founder, I said, hey, I know you guys are bootstrapping, you haven't even done a raise yet. Could I convert my commissions for anything I sell into equity at a discounted price? And he agreed. He said, well, as you're going through, if you continue to like this company, you could either take commissions or you can convert to equity. So I thought that was an interesting way to do it as well. A little bit different than shared success because it's actually touching their cap table in some way, but just another interesting approach from a sales perspective. Brian, can you talk about how you schedule yours and some of the things that you've learned and pros and cons?
Schedule clients?
Yeah, no, just generally how you set up your different billing relationships.
Oh,
I know you do a couple different things, so if you could talk a little bit about that.
I'm going to go to one thing that Henning said.
Sure.
Look, do not sell. Hourly is corporate. You're no longer in corporate. Sell outcomes. That's what people are buying. Outcomes. Results. Right? They're paying for your experience and your skill and your ability to get it done fast, not so you can spend time there. Right, so I tell all clients that the way we do it with our clients is it's all outcomes. What outcome are we going to drive for, right? And then a couple of ways we structure it is we will be success fee, right? We have to have high confidence in the business to basically share in revenue. We create a baseline. You're at X. Anything we grow at above X with you, we get 10% of. But the thing that we find that clients actually want is milestones in between the success and the start, right? How do we know this is working? Define that with them, right? Or like, let's say we're setting up a strategy and a sales team, right? When you pay X amount of dollars a month, when I put together the sales playbook, it's a success, it's a milestone fee. When I put together a sales process, it's a milestone fee, and on and on and on, right? So I get paid when things get done, and you see progress, because in sales, the outcome takes a little bit to actually develop, right? Like it doesn't happen right away. So. And we never sell time. If somebody wants to buy our time, that's not a prospect, right? You are no longer in the corporate world.
If I may just add a comment to outcomes, because we do the exact same thing. It is about outcomes. That's how every conversation starts with a founder or CEO. It is never about, can I buy 10 hours a week of a fractional CRO? No, it's about, my sales team sucks, or we're not achieving our quota, or my board is on my, stepping on my toes because we're not growing. And so the fractional engagement is to achieve the outcome and rectify that situation. The one caveat to this is that, especially in the startup world, those outcomes change all the time. So, you create that elaborate statement of work up front with milestones 6 months out, every week a deliverable. And after the first week that you're in, that whole thing changes and it falls apart because of changing priorities. So what I like to do is have a rough outline of what that assignment could look like, especially for the first 1, 2, maybe 3 months. But it leaves room for a lot of adjustment. And at the very top, it always says the fractional executive is reporting to the founder, John Doe, or to the CEO, Jane Doe. and they set the tone of the assignment. So that from a fractional executive perspective, you can always say, yes, let's adjust where we're heading. And at the same time, though, you can always go back and say, well, we did talk about these deliverables in the first month. I won't be able to deliver all of them because we added 5 new things into the mix that you asked me to work on. And that is, I mean, that process is all about communication. I would imagine that you do that all the time.
A statement of work is a boundary of what we're going to work on, and I get to point back at it if we go outside that boundary. Because it happens a lot with startups, but it happens with every engagement. It's guaranteed. Expecting it to not happen is insanity.
So, Brian, with yours, do you do like a master services agreement and then underlying statements of work, or how do you structure, from a papering perspective, how do you structure your contracts?
We keep it really simple, right? Hey, here's what it is monthly. Here's the outcome we're working towards. Here's the milestones, and we like to do it in 30 to 90 day increments. And I want to qualify this because. We don't want to be around forever. We want to work ourselves out of a job, right? That's just our strategy. I'm not telling you to do that. I'm telling you why I'm 30 and 60, 90 days, because we want an out as much as giving them an out, right? Like if this ain't going right, like the worst thing is having a bad client and a bad client relationship, because all of us in this room, most of us in this room, you are your business. So when your name gets run through the ground, so does your business, right?
Colin, your 2 fractionals, how did you structure, and are they different based upon the different functional roles, or how did you set up those 2 relationships?
Yeah, I mean, as I see the role of fractional, it's, if we grow the companies to a point where we need those roles in-house full-time, then that's going to open up a different conversation with the fractionals that we have. But at the current state, the relationships that we have with them is fantastic. They're bringing tons of value, and it's just, there's no long-term contract. It's just kind of a month-in, month-out retainer, and we're happy to, pay that retainer, and we have no plan in place to end the relationship, and neither do they. So things are
Perpetual.
Yeah. Yep.
Okay, loaded question. Does free ever come into the equation for some period of time, and how?
As a small business owner, if you're giving me something for free, then yes.
How's a layup, Brian?
My initial gut reaction is no, and here's why. Because I see too many people do it and get taken advantage of. Right? I have too many clients that were EOS implementers, integrators, fractional CFOs. Well, I'll just do this part first. If it is something free, make it like an assessment where you're learning something as well as them, and then you can assess, right? So they get value, you get value, right? But look, the $500 client complains and gives me trouble. The $50,000 client says, where do I sign up? Plain and simple.
Any?
To the small business owner who takes anything that is free right away, that's exactly why, I mean, he does it, and what it does, it devalues the service and the product that the person is trying to give you. And so my resounding answer to your question is absolutely not. Because my service, my time as a fractional executive is worth something. We can debate what it's worth, but it's not free. And
so going a step further, and feel free to share what you feel comfortable with, but I bet a lot of people are interested in, what are these rates? Like, what is a 1 day a week fractional executive? I know you index on sales and chief revenue officer, but can you talk a little bit about the actual buying company sizes and general ranges you're seeing in the industry? Not necessarily maybe what you guys charge, but if you could give some baselines, I think a lot of people are interested in that.
Yeah, absolutely. I mean, in the lead-up discussion we had, I raised that point because I said we need to talk numbers, not just concepts. And and the answer to a number always needs to be preceded with "it depends," because it depends on a lot of different things. We have on our roster today about 680 executives that are all pre-vetted, and part of the vetting process is to try to understand what the price that someone puts on their value, on their contribution. What's the number on their self-worth? And for everyone, it's different. And so on our roster of executives who are available for sales leadership roles, we have executives who will go to work for about $100 an hour. And we have other executives who say, don't bring anything to me that's less than $500 an hour. And it's a reflection of many things, including the roles that they've had before, the money they've earned before, how they feel about the value that they can bring to a company. And it's that range that we operate in. Now, there are clusters, and like so many things, the cluster is somewhere in the middle. And from a sales leadership perspective, so putting a fractional CRO, CSO, or a fractional VP of sales into a business, the most common rate that we're seeing is somewhere between $175 and $250 an hour. There are outliers, but that's the most common rate. And as I said before, we don't charge per hour, but you can bring everything back to dollars per hour and makes the discussion like this easy.
That's great. We're going to get into Q&A in 1 minute, but I want to get feedback, Colin, from you as a small business owner. Like when you're buying, what do you see? Like what's comfortable for you based upon revenue size of the business and needs? Can you talk a little bit about that?
Yeah.
And then Brian, I'd like to hear from you, and then we'll go into Q&A.
Yeah, I mean, and just to clarify that, I was tongue-in-cheek about just taking anything for free, but I can say from the fractional perspective, like most, maybe all decisions in life, it does boil down to emotion. And when we are interviewing fractionals, cost matters, yes. But I can tell you with, going even through some more recent fractional interviews, a lot of it boils down to, how much care are they taking in their consideration of our business? What is the chemistry like between us and them? Certainly, what is their history and whatnot? So, yeah, cost plays a role, but I can absolutely say when you are hiring a fractional, and we talk about, all the benefits that fractionals bring in, and as a buyer, when you understand what those benefits are, that's a very serious decision that you're making for your business because they're coming in at a leadership role. So I could say that as a fractional, the best advice that I can give you is, be honest. Try and bond yourself with the client, but in an authentic way. And if it's not a good fit, it's not a good fit. But if it is, that will give you the best opportunity, I think, to create a really long-lasting, valuable relationship between both parties.
Thank you. Brian?
Yeah, I would say, because I'm working on coaching, I'm working with clients on this all the time. Price is a mindset game, right? You're in your own head. We all get in our own heads, right? I have EOS implementers, when I first meet them, they're selling at $3,500 a day, and we get them to $8,000 a day, right? And you have to think of what's the lifestyle that you want, and what impact can you make in clients, and what is that worth, right? Because all those are combined. And two, pricing can be a strategy, part of your strategy, right? If you want to. A certain type of client will pay you $5,000 a month versus a certain type of client that will pay you $15,000 a month, right? Is what it is, right? So think about your pricing can be polarizing, if you will, right? And if you're driving certain results and outcomes, what's that worth to the owner of that company, right? And then once you standardize it, stick with it unless you're giving a price increase to everybody. Because the last thing you want two clients talking and you're completely all over the place, not good, right? It becomes a very small world.
And a thing to add to that, when I considered doing fractional full-time about 2 years ago, I interviewed a bunch of people that did this. And one of the guys I talked to, I saw for like 10 years, he was rolling strategic advisor, one after the other. So I reached out to him and I said, how are you doing your business? And he told me all these cool things. I said, well, what do you charge? And he said, I never charge more than $10,000 a month. And I said, well, can you get more? He said, yeah, usually. I said, well, why would you do that? And he said, with all these ebbs and flows of business, that $10,000 a month line is where the CFO looks to cut. And he said, as long as I stay right there, I avoid the cut almost all the time. Now, granted,
That's part of his strategy.
Now, granted,
Seriously.
if you're
Stay below the radar.
delivering tremendous value, they'll probably never cut you, but it just worked for him. So just an anecdote. All right, I want to open it up to Q&A. Sarah's got a mic for people who have questions, and she'll walk around. So I'd like to open up anything on the table. This is to help everybody get better here. So please, go ahead.
Sure. So I've had a couple of engagements that I've learned lessons from, and I'd love to get you guys' kind of perspectives on how I might have done better on this. And one of them was that I ended up going into a full-time role that was really fractional in a bunch of different roles, right? And negotiated that $10,000 a month, which is exactly of cash, and then also an equity stake. But the equity stake had a vesting schedule attached to it that was really attached much more to someone who was going to be a full-time employee for an indeterminate amount of time. And it also was supposed to be temporary, right? It's supposed to be for about 3 to 6 months worth of work at that reduced rate before it would go up to some other type of a comp. It could have been deferred comp as well, but was going to be something else, and I didn't do that right away. And then the second one was just about something that looked like it was going to be more of a channel partnership kind of relationship where they wanted my expertise in a market segment as well. But then so I'd give technical expertise to the development team and then sell into a certain segment and committed to a certain amount of time with them based upon a good friend who was their chief revenue officer saying we're ready to go. And then I got in there and realized they were really not ready to go and ended up spending 6 months on something that didn't really pay off. And so when you're going into an engagement, the beginning is really when you know the least. And I'd love to hear your guys' strategies about how you get past that so that you don't get stuck in either of those situations.
Yeah, I could talk to your first half because I just did this 2 months ago. So I was working with a client, originally started off at just a fixed retainer, but I really like what they were doing. I think they had a future, but I didn't want to get into any equity discussion until I knew them and liked them and thought there would be an outcome. And they didn't want to raise money, but they were about to close some deals. And they're like, hey, can you go in at a lower rate? And I said, all right, that's potential, but what would you be offering in exchange? So they said equity, but the amount that they were going to pay me at a discount again vests monthly. So, and that's fine, as long as you're cool with it. But going in out of the chute, not knowing the business, not knowing if there's a real there is always a red flag for me.
Yeah, because Christian, you just tied your two questions together. No matter how much time you spend up front, there are always surprises once you're on the inside. So to agree to an equity schedule right out of the gate before you've been on the inside is really, really risky, and I would stay away from it.
And I would say, and this was said yesterday in this room, I don't know who said it, but one, you have to vet your clients. Like you have as much, the assumption I'm making is everybody got in this to work for themselves and live a certain lifestyle. So you get to choose your clients. It may be hard to understand right now if you're trying to build, but you can choose your clients, and you got to vet them. It's got to be a match, right? And were you just trying to reach for something, or was this really, I don't know, right? Was this really good? And in regards to the equity stuff, one, we don't take it right away, and two, I have to have high confidence that this company is going to make it. That's the cherry on top, not the reason why I do it.
I think there was another question. Yeah.
So I currently price on a retainer, and I haven't had this issue yet, but it's kind of in the back of my mind as I think about the last time I had to negotiate a salary prior to salary transparency being really a thing. And it was always this mentality of, I've got to go in high because they're going to counter me down. Are you finding that same thing in the fractional space, or can we more confidently say, this is what I'm worth, this is my value, or should we be having some of that, like, expect them to counter?
We don't negotiate.
Yeah, it shouldn't be a negotiation. I mean, if you set the stage at the beginning by talking about a range, it shouldn't be a negotiation. And so I don't apply that strategy. I have not had clients who would walk out because I'm not negotiating. You can apply strategies that you would apply to any type of sale. Also, when you sell your skills. So if for example, it does turn out that at the very end, before you're ready to close, they're starting to negotiate. If you're still interested in the gig, negotiate back and say, well, if I gave you a range of 10 to 12, we settled on 10, now you want to pay 5. We can do that, but we can need to cut back on services, need to cut back on deliverables. If you want to open that can of worms and go back to the very beginning.
The other thing that you could exchange, and it depends on your strategy for that. Okay, you want a little bit less price. Will you commit to me to a year instead of 3 months? Mm-hmm. I think it's a useful trade. Again, if you feel really good about them and you want to be there that long. But I think certainty in this business is really important. I always like to have at least one anchor account, like where I know it's going to cover my monthly nut, and all the other stuff that I'm doing on top is interesting, fun, and profit and that sort of thing. So sometimes people will trade those. I think there's a question in the back. Yeah.
I was going to comment on the same exact thing that you pare back what you're going to offer if you're going to discount.
I don't think that was, I can't hear you.
You can't hear me?
Yeah, just maybe put a little closer.
Can you? Okay. Yeah, I was saying that, yes, you pare back on the different services if you're going to discount, that you can communicate. And the way I look at this, and it's with everything you do, any person you deal with, that's a partner. So whether that's your wife, whether it's your business partner, your clients, your customers, your employees, it doesn't matter, you're a partner. So you do have some qualities and values that you can ask for that are important to you. You wouldn't, once again, somebody said that yesterday, you wouldn't just jump into, I gotta date 100,000 people just to get my numbers in so I can find a wife or something. But it's the same thing with your values. You have to be clear on what you want and realize you can do that. So I've learned in some sales training that you can turn that around. Instead of, I need the customer, let me communicate in the way that the customer is begging to work with me and work with me in my situation and what I'm looking for. So it's a back and forth, and it's a respect type of thing.
Thank you. Question over there.
Yeah, I really like this idea of shared success, and it's very intuitive for you guys who are selling sales services. But for those of us that are maybe a degree away from the actual sale, marketing, HR, operations, whatnot, does that make as much sense? And have you guys thought through how that might work?
What's your discipline?
I'm marketing.
Okay. Colin, do you want to talk about that?
Yeah. So really, we found, beyond ourselves, we found other people using these shared success agreements, regardless really of the discipline. And so what it is getting into, an agreement where you and the client are both willing to, take some risk and share in the upside. And the way that you're packaging out your offering, again, the calculator at sharedsuccessagreement.org, you can really play around with that to understand understand like what is the project, how much am I going to charge, what percentage of that is going to be shared success, what percentage of that is going to be full boat, and what do I expect my multiple to be on that money. You don't have to get into conversations about valuations. It's a really easy way to get into true relationship with the client, and so the shared success agreement at Cloudburst we've been using for 5 years. It's only probably been in the last 6 months that we've been kind of going out and talking about it, and the feedback that we've gotten from other people using it. I was just talking to another founder the other day, and he and the service provider were going back and forth, and we're talking about equity, this, that, and the other, and they ended up settling on a shared success agreement because it allowed them to not get into the complexities of a larger contract, not getting into equity and whatnot. And it's kind of this they're kind of dating before they might marry. So if we're going to stay on that thread, but yeah, beyond discipline, we really haven't seen a lot of issues in getting those executed. But again, this is a new category, and so I would invite people to challenge it. Again, we don't make any money on it, but we want to find out if this is really a category that people could take advantage of and build really wonderful businesses.
Quick note, it's not a business until there's revenue and there are clients. Everything else is just leading into that. So whether you're in marketing or a programmer or an engineer, until there's revenue, it's not a business. So the top line shared success is revenue, whatever your discipline is.
I think we got time for one more. That's you.
So question I have, and I think I've heard a lot about your pricing models, and I'm a little different because I'm an attorney, so general counsel. Have any of you, and maybe this applies to other people in the room, charged an onboarding fee where you've gotten to know the organization, you've done one-on-one interviews with the executives, you've really become part of that team?
I have not, but I have seen other people do that as part of an overall onboarding assessment, but I have not personally.
Mm-hmm.
Yeah, we've brought in executives on a project basis first, where they came in to do an assessment initially. That was time limited and a fixed amount, and then the actual fractional assignment started afterwards.
And I would say build it into your process. Right? Like, hey, for the first 30 days, we're just going to get to know each other. Like, I sit on a board of an accelerator for businesses, small businesses that are established that need to accelerate. And when somebody comes into that program, the consultant that works with them, for the first 30 days, I'm just sitting with you, figuring out how this works, right? How you tick, where the problems are, right? So just make it part of your process, and they're not going to negotiate against it, right?
I think we're at time. I really enjoyed this. I hope you all found it very informative. Please check out Colin's site on the shared success. If you're fractional sales, CRO, connect with Henning. If you want to talk about sales coaching and others, please connect with Brian. Anybody in the room, feel free to connect with me. You want to talk about your deals, hit me up anytime. It's all good. I like to pay it forward in the space. I also have an MSA and an SOW template that a buddy gave to me. If you want a copy of it, I'm more than happy. It'll save you a ton of time and legal costs to get you going. Hit me up for that, and thanks everybody for joining.
Thank you.
Thank you, everybody. Thank you so much for being here and all your great experience sharing. What's coming up is lunch in Mosaic. It'll be ready now at 12:15. During that lunch is a fireside chat with Amanda Brinkman. So it's going to be amazing. After that, our next sessions are at 1:30. So enjoy, everybody. Thanks.